right, let's jump right in. Today, we're digging into the latest quarterly results from the Carlyle Group, one of the biggest investment firms on the planet. We're going to unpack how they're navigating this pretty wild economy and, what's really fueling their incredible growth. So let's get to it. So, to kick things off, this quote from Carlyle's CEO, Harvey Schwartz, perfectly sets the stage. He calls the environment complex but quite resilient. So, what does that actually mean? Well, it's not all doom and gloom, but it's not exactly a crazy boom time either. It's tricky. And that's the world they're playing in right now. So, you might be wondering, how can they be so sure things are resilient? Well, before we even get to their own numbers, you've got to understand their unique vantage point. See, they have this inside look at the economy that almost nobody else has. And here it is. This is their secret weapon. Forget government reports that are weeks old. Carlyle gets real-time data straight from the source, their own massive portfolio of companies. And you know what that data tells them? That profits are holding up and, importantly, people are still out there buying stuff. This isn't theory, it's real-world data, and it's what gives them the confidence to make their big moves. Okay, so we've set the stage. We know how they see the economy. Now, let's get into the good stuff. How did Carlyle actually do? Let's break down the numbers that really tell the story of their quarter. First up, just look at this number, $474 billion. That's their assets under management, or AUM. It's basically the total size of the Worcester managing. And yeah, it's a new record for them. We're talking nearly $500 billion. All right, next step, fee-related earnings. Think of this as their steady paycheck. It's the predictable cash they get just for managing all that money we just talked about. And it's up a very healthy 12% from last year. This is the number that shows the core business engine is humming along beautifully. So where's all this growth coming from? A huge chunk of it is right here, $17 billion. That's how much new money investors handed them to manage in just the last 3 months. They are absolutely crushing it and on track to blow past their $50 billion goal for the year. Okay, but here's where it gets really interesting. It's not just that they're making money, it's how. This chart tells the whole story. You see, 5 years ago, these two businesses, Global Credit and AlpInvest, were only about 25% of their fee income. Fast forward to today, and they're the main event, making up over half. This was no accident, folks. This was a calculated, strategic pivot into the high-growth lanes of the financial world. So how exactly did they pull off that big shift? Well, Carlyle's success really boils down to 4 key growth engines. Think of them as the 4 cylinders firing to power the whole machine. Let's take a quick look at each one. First up, you've got their bread and butter, global private equity. This is the classic Carlyle, what they're famous for, buying companies, making them better, and then selling them. And even though the market's been a bit rough for making deals lately, they're still knocking it out of the park. And check this out. This is how you know they're outperforming. Over the last year, they handed back $19 billion to their investors. Now, that's not just a big number, it's 1.5 times the industry average. So in a market where it's tough to sell, Carlyle is finding ways to get it done and get cash back to their clients. Pretty impressive. All right, engine number 2 is Carlyle AlpInvest. Now, this is a fascinating space called the secondaries market. Let me break that down. Basically, they swoop in and buy investments from other investors who need to get their cash out early. They're like the ultimate liquidity provider in the private market world. And let me tell you, this business is absolutely on fire. Their earnings are up over 80% this year alone. Plus, they just raised a monster $20 billion fund just for this strategy. It makes perfect sense, right? The bigger the private markets get, the more people will need a way to cash out. And AlpInvest is sitting right there, ready to go. Engine number 3, Global Credit. This one has become an absolute behemoth for Carlyle. We're talking about them lending money directly to companies, acting like a bank, but without being a bank. And they're cleaning up, because ever since the financial crisis, regulations have made it harder for traditional banks to do this kind of lending. So Carlyle just stepped right into that massive gap in the market. And I mean, just look at this chart. The growth is insane. Their credit business has ballooned to over $200 billion. That's a growth rate of 33% every single year. This business now accounts for almost half of everything they manage. It is, without a doubt, the biggest driver of their steady, reliable income. And that brings us to the 4th and final engine, global wealth. This is a really big strategic move. For years, Carlyle's funds were only for, giant pension funds and institutions. Now they're opening the doors to wealthy individuals, and it's a total game changer. And the results? Well, they speak for themselves. Just a couple years back, they were getting maybe $300 million a quarter from regular wealthy investors. Today, they're doing 10 times that, pulling in $3 billion in a single quarter. It's obvious this is a huge new growth area for the firm. Okay, so we've talked about the big picture, the numbers, the growth engines, but that's all a bit abstract, right? So what does this actually look like on the ground? Let's zoom in on one specific deal to see how all this comes together in the real world. But before we do, just a quick bit of jargon busting. You're going to hear the term enterprise value. Don't let it throw you. All it means is the total price tag for a company. If you were to buy the whole thing, debt and all. It's the key number in any big deal. Okay, so check this out. Here's that strategy in action. Carlyle was one of the main money men behind this huge $1.4 billion energy deal. This is the perfect example of their machine at work. They use money from that giant credit engine we talked about to make a major deal happen in the real world. It's all connected. All right, so we've gone from the 30,000-foot view all the way down to a single deal. Let's pull back out for the big finish. What is all of this? Carlyle's incredible quarter. Tell us about where the whole world of investing is heading. When you boil it all down, here's the big takeaway. Carlyle's success isn't random. It's perfectly aligned with three massive, long-term shifts in finance. First, you've got the rise of private credit, which is basically eating the bank's lunch. Second, as private markets get bigger, you need more ways to get cash in and out, which is pure fuel for their secondaries business. And third, they're tapping into a giant, underserved market, regular wealthy investors. They're riding three huge waves at once. And all of this leaves us with one final, pretty provocative question to chew on. When you think about it, the story of Carlyle's growth is really about private money taking over a role that the giant banks used to own completely. So as these firms get bigger and bigger, rivaling the scale of Wall Street's old guard, you have to ask, what's left for them to do? What does the future of Wall Street even look like? Something to think about.